Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Justin Zacks, Vice President of Strategy over at Moomoo Technologies, to discuss the dominant market themes in 2022 and what investors should be looking for in 2023. Justin, it's great to have you with us. Welcome to Trade Talks.
Thank you.
And let's start with the dominant market trends in 2022. What really drove the narrative this year?
2022 has really been about inflation. CPI has run above 7% pretty much for the whole entire year. And the Fed, in response, has raised interest rates by 375 basis points. And so that has led to pretty much the worst year for the S&P since 2008. It's down about 17%. But we are seeing some green shoots. So the last CPI report for October came in below economist estimates at 7.7%. And PPI, ex-food and energy, was also below analyst estimates. And since those numbers came out in the last week, the Nasdaq's up 10% about, and the S&P is up about 6.5%. Basically, these macroeconomic variables are really outweighing what's going on the company level. So we just had the earnings season and obviously had this big rally, and it wasn't really about the earnings. It's been pretty mixed. About 90% of the S&P 500 have reported earnings so far, and less than 70% have beat earnings, and that is below the average, which runs well above 75%. This is actually the worst quarter for earnings in terms of expectations since the first quarter of 2020, when we had the pandemic. And obviously we saw a lot of the tech companies, Amazon, Meta, Alphabet, report really poor growth compared to what was expected.
Right, so which sectors are you looking at now then?
So really what I'm looking about, on the downside, it's been, really all about tech. And you can see from these two heat maps that we've posted here that there's been a rally in the internet sector, software, semiconductors, on the back of falling rates over the past week. But for the year, most of these sectors are still down about 30 or 40%. Meanwhile, the defensive stocks have really outperformed as investors look to safety. Drug manufacturers, healthcare, consumer staples like beverages have all been positive on the year. But the real winner has been energy. Integrated oils are up about 40% on the year. E&P companies are up about 65% on the year. And given the current geopolitical landscape, really could keep this going. There doesn't seem to be any developments in the Ukrainian war that point to that being resolved anytime soon. The U.S. has sold down its strategic petroleum reserve to levels we haven't seen since the mid-'80s. At some point, they're going to have to buy that back. OPEC has talked about cutting production if prices fall too much. So all this will keep energy prices supported into 2023.
Right, and if we drill it down even further, what are you looking at specifically this week? This
week has really been all about retailers. So the tail end of the earnings season is when all the big retailers report. And generally, they've done pretty well. Tuesday, we saw Walmart up 6.5%. That's its biggest move since July of 2020, after reporting results that crushed analyst expectations. On the flip side, though, we did see Target this morning. Their outlook wasn't that great, so the stock is off a bit. In terms of the home improvement retailers, Lowe's and Home Depot both outperformed and were up on the week. But what's good for these particular companies is not necessarily good for the overall market. This morning's retail sales report showed, that retailers continue to do well above what economists expect them to do. And this really raises questions as to whether the Fed will have to do more to dampen consumer demand that really continues to be very strong into rising interest rates.
Right, so then when you think about your market outlook for 2023 going forward, you had mentioned this year was really all about inflation and what the Fed is doing. Do you expect more of the same for the new year?
So to me, it's a little bit unclear because inflation is moving down from its peak, but it's still really high compared to historical norms. And monetary policy works with a lag. So economists are really unsure right now whether there will or won't be a recession. But what I do expect is there to be a lot of volatility, just like 2022. Given the amount of uncertainty. And this elevated volatility really presents a great opportunity for traders. The Moomoo app has a community where users can interact with each other and exchange ideas, both on long ideas and short ideas. They're using the tools on the Moomoo app to inform these decisions. For instance, you can see the daily short volume on Disney stock spiked after it reported results that missed analyst estimates and has remained elevated. And Moomoo traders can use this data to inform their trading decisions, whatever they may be.
All right. Appreciate the insight, Justin. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.